Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is the index review for August 1st, 2025. The S&P 500 had high volume selling this past week, which hit all of the major indices and closed lower, down over 2% for the week. It appears the correction that we've been looking for is finally starting in the major indices, and basically we recently had a low volatility melt up for most of the month of July, but a large part of those gains was already erased by the move lower this past week. And again, sellers really took control of the market this week and pushed price down on heavy volume. If we look at the daily chart, the selling pressure was really there the entire week and just ramped up on Thursday and Friday when some key earnings releases came out. And there was also a jobs report on Friday, which the market reacted very negatively towards. Earlier in the week, Wednesday after hours, there was earnings reports from Microsoft and Meta, which had positive reactions, but the rest of the market didn't really get a bid from those reactions. And what happened was price tried to make one more final high on Thursday, but there was too much selling pressure in the rest of the market, and the market closed at the lows of the day on Thursday. And then Friday, the market basically buckled under the pressure with that jobs report coming in, and gapped down below both the 10-day and 20-day moving averages, and closed towards the lower end of the range on Friday. So big change in a short period of time, and this has happened before. I'll show the July 2024 correction next, but a gap down off the highs is not necessarily an abnormal thing. And again, a lot of this melt up is already corrected now as we're starting this correction. Overall, I think a logical place to look for the next move would be down to the 30-week moving average. That's where corrections tend to try to find a bottom, and then we'll see what happens next. We've got this gap up from back in May. The market might try and fill and maybe, start to find support around the 5,800 to 5,900 level. And then we'll see which way the market breaks. Do we get a bounce, a renewal of the uptrend, or are things looking even worse and maybe we roll over once again into another move lower? I think there's a lot of, as I discussed in the long-term review a couple weeks ago in issue 138, there's a lot of longer-term negative things that are happening that could suggest that we might need a big kind of down leg here in the stock market to kind of reset all this negative stuff that's happening, and that would be, the scenario right here. But ultimately, we don't know, we can't predict the future that far in advance, and I think the next thing just to look for is the correction down to the 30-week moving average. Looking at that July 2024 correction, it was a gap down off the highs. You can see the market was just making new highs above the 10-day moving average. Everything's fine, and then all of a sudden things change dramatically. Big volume comes in, and we had big volume all throughout that correction until we had a panic late in that correction, and the market bottomed right around the 30-week moving average. So same thing's happening here. Gap down on heavy volume to start this correction. And again, I think a logical area to look for a bottom would be around this level. We've got major moving average support there. We've got price support down there. And I think it makes sense that when the market's in an uptrend, it initially usually tries to find support at that 30-week moving average, and then we'll see what happens after that. Equal weight S&P 500, big selling pressure, got a failed breakout here, again setting up So we had price moving back above the November highs, but now it's back below it. If this continues lower, we're basically firing off on that failed breakout. And this looks like a stage 3 topping pattern again too. So we start to trade below that 30-week moving average. We'll see what happens after that. But the equal weight has been very weak this entire, once we started correcting in November 2024, the equal weight's been weaker than the S&P 500 the entire time, which means there's a lot of underlying weakness in the stock market. We just had a mega bounce off of the panic lows here, but underneath the surface, we're still seeing quite a weak market, even though we had this mega bounce. Equal weight on the daily, you can see just monster downside volume here, gapping down on Friday. Buyers coming in a little bit at the 10-week moving average or 50-day moving average, but again, there's sellers pretty much control this market now. Even if we get a little bit of a bounce, it's likely just going to roll back over to the downside. NASDAQ 100, high volume selling coming off the top, already engulfing multiple candles, just like the S&P 500. Daily chart, you got that gap down. You can see how heavy the volume is here on the downside. NASDAQ composite, again, more heavy volume off the top. And then Russell 2000, already retesting the 30-week on week 1 of this correction. That's not a great setup here. For the bulls, you've got this longer term lower high in place now. And really, this is a stage 3 topping pattern here. We start to roll over below the 30-week. We'll be in stage 4 on the Russell 2000 and, putting pressure on the overall market. So again, from a longer term perspective, there's multiple things in this market that don't look good right now. Moving on to breadth. This is where we can start to time a bottom using the breadth indicator. And again, we look for this to be below the 20% level. When you get really nice bottoms to corrections. So we got plenty of room to move lower here. We've already moved lower off the top to start this correction. Same thing with NASDAQ 100 breadth, moving off the top. We had this divergence we talked about over the past few weeks. It finally triggered this week. And again, we're moving lower. We were overbought for quite a while now, so we're very likely going to move below this 20% level during this correction. NASDAQ composite, same thing, moving off the highs, moving back lower. And then short-term breadth, percentage of stocks above the 20-day moving average. This still has room to move lower. This tends to bottom out during the kind of shorter-term moves in a downtrend, and then might bounce again and then retest the lows again before this correction is over. So we still have room to move lower both on a short-term and a little bit more intermediate-term basis here. And then VIX back above the 10-week moving average, the red line. This is in the shorting guide where corrections like the trend nicely above the 10-week moving average. And then when they crash back below it, that tends to indicate a bottom to a correction. You can see the VIX exploded back in July 2024, closed back below the 10-week in early August. That was a good signal that the correction was over. During the recent bear market, VIX trended above the 10-week, even moving lower earlier in the week, but closing above it in March, had a massive spike again, then closed below it in April, signaling a bottom to the correction. And again, we're closing above it on a weekly basis now for the first time this week. So as long as we trend above that 10-week moving average, that's another bearish configuration for the market and a good indicator to remain short, again, until we close back below that 10-week moving average. So VIX is now configured to the short side, and VIX has room to move higher during this correction. So bottom line, stock market is in correction now. Big volume selling off the top. It's time to be defensive or play the short side. Um, let corrections need to play out through time. So there's no rush to be a hero and re-enter this market. We could easily see this correction play out over August, maybe even September, before we start to see some type of bottom form. And then we'll see what happens after that. If we get new stage 2 breakouts, we'll play the long side. And if the market acts weak off the bounce, then we'll just look to reshort this market, and the market will be in more trouble on a longer term basis.